Good morning. Good morning. Good morning. It's Wednesday, the 19th of March. It's 8:30 in the morning. It's the morning blast with myself and Mr. Michael Brown. Before we get underway, best to get the legals out of the way, especially because I could see PIQ's CFO listening in, so we better clear that. As usual, nothing discussed on this Spaces session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Trends PIQ or PIQ Suite, or indeed the hosts, which, as you know by now, is myself, Mr. Ryan Paisley, and of course the illustrious Mr. Michael Brown. Good morning, Mr. Michael Brown.
Oh, illustrious. I'm moving up in the world. Good morning, Ryan. Good morning, everyone. Happy
Well, I'm in a
Wednesday.
good mood.
Happy Fed Day as well, of course.
Oh yeah. Well, also happy retracement in the Euro Dollar Day.
Oh well, dear. Don't count your chickens just yet.
Oh, I'm very much not. I'm very much not.
Spot
So
is back above the 109 handle, so modicum of confidence has returned.
just for those that aren't keeping score, so me and Michael Brown have a bit of a lunch bet on that. I've got well, we did it when it was just shy of 105. I've got parity.
Yes.
Michael's got 110. Yeah, whoever wins now, it's not for the right reasons that we said. It's just a random number now.
Yeah, and it'll be a very big random number on the bill, hopefully, that you'll be settling.
Oh yeah, it's not going to be a cheap one. Also, just before we do crack on, because we are starting to really push these out onto YouTube and hopefully very soon onto Spotify and stuff, I think I'm going to have to start doing some kind of almost like an apology each morning and saying, look, we do record these live. There might be some swearing. And also sometimes the quality isn't great on the microphones.
Yeah.
To be honest, myself and Michael, we're not the type of people to go into the editing studio and try and tidy it up either. I'll give you a clue.
No, most definitely not.
It is what it is. But anyway,
Indeed. Take it or leave it. Yes, let's get on with these. Plenty to get through this morning. Good morning, everyone. In terms of the markets, yesterday it was a little bit of a risk-averse day, actually. The S&P 500 ending the day about 1% lower than NASDAQ 100, down by about 1.75%. Of course, both of those indices snapping a 2-day winning streak. We haven't actually had a 3-day winning run for either since the start of February, and we're not going to get one given the performance that we saw yesterday. In terms of markets elsewhere, we saw some modest gains across the Treasury curve with 2- and 10-year yields falling by about 2 basis points apiece, and in turn that dragged the dollar lower against most major peers, with the dollar index trading down to a low of about 103.25. Cable rallying north of 130 for the first time since last November, and euro dollar testing the 109.50 mark again. Although, of course, as we just covered, we have seen spot back away from that level since. Gold, though, continuing to shine, up by another 1% yesterday, trading to fresh record highs around $3,035 an ounce and pushing further higher this morning. And WTI crude a little bit softer, back under $67 a barrel during the session yesterday. Although as we kick things off this morning, it must be said that we are seeing a little bit of a kind of pre-FOMC drift come into financial markets, as is often the case, although that drift is seen everywhere other than in the Turkish lira, which is down 10% this morning after President Erdogan decided to throw his nearest and closest political rival in prison. Just a handy reminder there that he has a tendency to do rather stupid things.
Just bit of color on that. Sorry, bit of color.
Go on.
So the official reason, again, we don't know what the real reason is. Maybe this is the real reason, but just throwing it out there. It's under the guise of alleged corruption and terror links.
Right.
There you
Good. well, if you believe that, I've got a bridge to sell you, but we'll leave
also,
that.
I'm just glad that I can cross it off my list of things to say, because there was no chance I was going to attempt to say his name.
No, nor am I. There's a reason why I didn't go down that route. Anyway, we are not emerging market experts. In fact, I'm not sure what we are experts in at this point. But there were plenty of fundamental catalysts driving financial markets yesterday, so I've got a lot to rattle through this morning. Of course, most attention was focused on this telephone call between President Trump and Russian President Putin. To be completely honest with you, it was a little bit of a nothing burger, this phone call. The big sort of headline out of it was that the two sides have agreed, so Russia and Ukraine, not to hit energy facilities for the next 30 days. Of course, this is well short of the full 30-day ceasefire that Ukraine had signed up to. What is interesting, though, is that the Russian readout from this call said that Putin had agreed not to hit energy facilities. The US readout from this call said energy facilities and infrastructure. So there is a little bit of sort of confusion, I guess, as to what exactly that covers. I think it's quite clear that the Russian side do not believe that covers infrastructure, because about half an hour after the readout from the call, they launched a whole load of missiles and knocked the power out in one of the main Ukrainian cities where fighting is currently ongoing. I think the nub of all of this is that while negotiations will continue, we do seem to still be quite some way off a peace deal or a ceasefire being agreed. There are negotiations that will continue on that front in the Middle East, quote, immediately. But it does seem, for now at least, that Putin has kind of played Trump like a fiddle, really. He kept him waiting for an hour. He was an hour late to the call. They were then on the phone for 90 minutes and have actually ended up agreeing something that probably benefits the Russian side more than it benefits the Ukrainians. So I'm not entirely sure where this goes next. It certainly wasn't the massive positive catalyst that some in the financial
Well,
markets have been hoping for.
I'll tell you where it goes next officially, because again, this is something else I can cross off my list. Apparently, there's going to be a new round of ceasefire talks set for Sunday in Jeddah, with the US envoy pushing for progress on yesterday's call.
Well, there we go. There's one to watch over the weekend. In terms of
gapping risk.
Oh, yeah, even more potential for gapping risk is already pretty high. In terms of other bits and bobs from yesterday, then, the other big thing that folk were keeping an eye on was what was going on in Germany and the passage of the infrastructure and defence spending bill. That did pass in the Bundestag as expected. It was very much a case of buy the rumour, sell the fact in terms of the market reaction in the euro, in Bunds, and in the DAX. But nonetheless, we are already seeing the positive impact of this spending coming through, at least in terms of economic sentiment. The ZEW expectations index, that rose to 51.6 per the data released yesterday. Of course, this data referencing March. That is the highest level since February of 2022. So Germany finally getting their fiscal act together. A few other things worth mentioning. We heard from the Treasury Secretary Scott Bessent yesterday. He was confirming that each country will be getting a tariff number on the 2nd of April. Of course, this is very much in keeping with recent reporting. I guess the most interesting thing on the tariff front that came yesterday was a whole host of Wall Street Journal reporting. And I'm going to quote here the most important line within this report, which was that no matter what type of reciprocal tariffs the administration settles on, officials expect that they will take into account VAT that many other nations charge on consumption within their boundaries. This is very, very important, particularly for countries like the UK and the EU. It also shows that the Trump administration don't really understand how VAT works, because you pay that whether it's a good that's made within the borders or something that you're importing. But nonetheless, it does raise the prospect of those reciprocal tariffs being considerably higher than they otherwise would be if VAT wasn't included in the calculation. The other thing that was interesting from what Scott Bessent had to say yesterday during this TV interview is that he said, and I quote here, the underlying economy is healthy and that there is no reason for there to be a recession. Now, the reason I flag this is because just a month ago, the very same Scott Bessent was talking about how the economy is brittle underneath. Now, that seems to be a relatively interesting change in tone and rhetoric from the Treasury Secretary. I don't think it's particularly in reaction to what we've seen in markets. I don't think it's a Bessent put or anything like that. But nonetheless, I think given the amount of sort of pitch rolling that members of the administration, including Bessent, Lutnick, and Trump himself, have been doing for a potential economic slowdown, the fact that Bessent is now saying, actually, things are pretty healthy and there's no reason for things to slow down, I think that's probably worth keeping a close eye on, particularly if other senior administration figures begin to change their tune as well. Were you going to say something then, Ryan?
No,
Oh, no, sorry. I thought I was prepared for you to provide us with some pearls of wisdom, but they weren't forthcoming.
Ooh,
In that case, we'll move
we're
on
in there.
to my specialist subject, which is technology. We heard
Yeah.
from NVIDIA yesterday at their GTC event, which seemed like a room of 17,000 nerds listening to a bloke in a leather jacket. That bloke in the leather jacket, of course, was the company's CEO, Jensen Huang. He was basically outlining NVIDIA's product roadmap for the next couple of years. Now, here we go. They are apparently going to transition to something called Blackwell Ultra in the second half of the year. And then in 12 months' time, they will provide a chip called Vera Rubin. And then in that will arrive, sorry, in the second half of next year. So we're going Blackwell Ultra this year, then we're going to Vera Rubin, whoever she is, next year, and then in the second half of 2027, we're going to have something called Vera Rubin Ultra, which sounds very,
Oh,
very
brilliant.
exciting and brilliant indeed. Whatever any of this means, and I'm sure Tom Talks Cars is furiously typing away as I speak, the market clearly was not overly enamored with these announcements because Nvidia did trade about 3% lower on the day yesterday. Of course, the tech sector hit more broadly, but nonetheless, the GTC announcements failing to give the stock much of a boost. Other news in the AI sector, actually.
Sorry,
Oh, go on.
just on Nvidia, I think something that was quite bullish news. Well, maybe not just for Nvidia, but for also GM. The GM Nvidia partnership for robo taxis. I think this, potentially another solid competitor for Tesla. Tesla also had news yesterday that they got a robo taxi license for California. Although, to be fair, what people are doing to Teslas in the US at the moment, would you really want to be sat in the back of a Tesla with no one driving,
No.
going through San Francisco, stopping at red lights? Because I'll give you a clue. I've seen videos of what people have been doing, it's like Waymoos and stuff like that. You would not want to be sat in the back of a Tesla right now with no one in the front seat. So I think this could be potentially very damaging if GM and Nvidia really do kick on with this. It could be another nail in the coffin for Tesla's robo taxi ambitions, to be honest.
Yes, that is a very good point. There were actually, on that note, there were a whole host of quote unquote partnerships announced with NVIDIA yesterday after this speech. I think it was about 15 or so, and there's really no time to go through all of them. But the majority of them just seemed to be a company saying, we're going to buy your chips and we're going to call it a partnership instead, probably to try and get a bit of a boost in their share price if NVIDIA rallies. But maybe that's just me being a little bit cynical. Other bits and bobs from yesterday. Some news here in the UK in the, I guess, banking or fintech space, whatever you want to call it. Revolut, of course, they partially achieved a UK banking license last year, and they're likely to get the full banking license this summer. According to sources cited by Dow Jones, they are viewing this banking license as paving the way now for them to move towards an IPO, with that potential listing to come in 2026.
Where?
Well, I was going to say that's the very, very important question, is that the report did not allude to where. Of course, Revolut have, at face value at least, been very, very committed to the UK in recent times, obviously going for a UK banking license. They've also just bought and are doing a massive refurb of the old Thomson Reuters building in Canary Wharf to turn it into their global headquarters. Does any of that mean they'll list in London? I really hope it does. But
Yeah.
given the valuation potential, which is probably much greater for a technology firm in the United States than it is on the LSE, I'm not going to hold my breath, but certainly one to
Yeah.
keep an eye on.
I think that's the important thing. Like me and you, obviously, we're both very much cut from the same cloth. We would love Revolut to IPO in London, but at the same time, I would not blame Revolut for saying the last place we want to IPO is London.
Yeah, I would
Unfortunately,
very much agree with that. So yes, one to watch there. They were valued at about $45 billion with a B dollars in a private share sale that took place last November. We will, of course, wait further information on that one. It's like about 18 months or so away in terms of that listing. Two other things I wanted to mention before I throw it back to you, Ryan. Just on the data front, yesterday we did have some inflation figures out of Canada. CPI rising by 2.6% on an annual basis in the month of February. That's a pretty chunky rise from the 1.9% pace that we saw in January. And also the core metrics were all hotter than expected as well. Of course, the Bank of Canada are stuck between a rock and a hard place at the moment, to be completely honest with you. Price pressures are bubbling away and clearly likely to intensify amid the tariffs that Trump keeps throwing on them. Those tariffs also likely to have quite a significant detrimental impact on economic growth. And of course, all of this comes at a time of huge political uncertainty amid the elevation of the unreliable boyfriend, Mark Carney, to Prime Minister and the likelihood of a general election within the next quarter or so. Speaking of central banks kicking off what is a busy 36 hours of central bank decisions, we had the Bank of Japan in the very early hours of this morning. The BOJ standing pat on policy in a unanimous vote, holding the policy rate steady at 0.5%. Their guidance was very much a reiteration of what we've heard recently, noting that the virtuous cycle of prices and wages is intensifying and that the price trend in Japan is likely to be in line with their outlook by the second half of the year. Governor Ueda at the press conference then went further, reiterating that the Bank of Japan will continue to raise rates further if that economic outlook is realized, while also noting that it is difficult and hard to pinpoint the neutral rate within Japan. So guidance very much in line with what we would expect from the BOJ. They are going to tighten policy, they are going to hike rates further, and then they are not putting a ceiling on how high rates could go just yet. And for the moment, that is all from me. We will talk about the Fed in a short while after your little roundup, Ryan.
What my little roundup. Wonderful. Thank you very much, Mr. Michael Brown. So just some overnight news headlines via our good friend Zach. Please check out the overnight news roundup that we put out on Substack, also our pin tweet, yada, yada, yada. Sticking with the Bank of Japan just briefly. Strategists see the yen softening as the BOJ signal caution about US rate policies. That's according to Bloomberg. And sticking in Japan in general, exports rose for a fifth month in February, possibly reflecting stockpiling ahead of Trump's tariff escalations. I think that's pretty much obviously what's been going on. March, business sentiment turned negative on US tariff worries and sluggish China demand. That's according to Reuters. And Japan's gas industry advocates more US LNG imports, but seeks mutual benefits. On US tariff and Fed outlook, the Wall Street Journal's Nick Timiraos says looming tariff hikes could bolster the case for the Fed rate cuts if inflation expectations spike. Heightened consumer inflation expectations pose a challenge for the Fed's battle against price growth. That's according to the FT. Trump has fired 2 Democratic FTC commissioners, raising concerns about the independence of the regulatory bodies. Investors.
Oh, actually, sorry, just on that. This is not This is not my point. It's from UBS, their chief economist, a chap called Paul Donovan, who does a very, very good email every morning. He was saying that in that email this morning, it has the whole FTC thing. Everyone's kind of gone, it's only the FTC. But it's more a question of, does it set a precedent for what Trump could do to other similar roles that are, arm's length from government and confirmed by the Senate, aka people on the board at the Fed. So it's just one to sort of keep in the back of your mind.
No, absolutely. Where was it? So yeah, investors have funneled $22 billion into short-term treasuries, $22 billion, obviously, amid concerns over Trump's economic policies. That's gone to the FT, sorry. In China and Asia, China is forecast to keep lending rates unchanged on Thursday as recovery momentum stabilizes. The Vice Commerce Minister told PepsiCo's chair that US-China trades should be win-win for both the US and China. Indonesia's central bank held rates steady. Bank of Thailand eyes growth risks, with Nomura expecting deeper cuts. Ireland's central bank warns of potential US trade barriers could trigger a recession in Ireland. Crypto and institutional, one for the people following the crypto. Obviously, if you do follow crypto, do follow our good friend Cam, who's listening in, part of the Team PIQ now, putting out a primer at the moment on digital assets. I think that's going out later today, so keep an eye out for that. North Carolina will propose allowing up to 10% of public funds in Bitcoin. And a Coinbase survey shows that 83% of institutions plan to boost crypto allocations in 2025. Both of those according to the Coin Telegraph. Geopolitics now. Russia-Ukraine update. Obviously, Michael spoke about the ceasefire that's kind of a ceasefire, kind of isn't. Russia apparently shot down 57 Ukrainian drones overnight. That's according to the defense minister. I think I saw reports of 40 before I went to bed last night. I think Russia had already sent over 40 drones into Ukraine. So, yeah, it's not a ceasefire. As we said earlier, ceasefire talks are scheduled for Sunday in Jeddah, says a top US envoy, where they're looking to add or kind of bolster what's kind of been agreed already. Multiple US security agencies have paused efforts to counter Russian sabotage, disinformation, and cyber attacks as the administration urges a quick end to the war. That's according to Reuters. Not sure that's a good idea, but who am I to say? China delays the BYD plant in Mexico. Beijing is concerned advanced car tech could leak to the US. That's a bit ironic considering most of China's car tech started in the US, or advanced technology starts in the US. I hope no one from the Politburo are listening to this. Canada's Arctic radar system. Canada partners with Australia on a $4 billion over-the-horizon radar system to expand northern presence, reflecting strained ties with Washington. Just some corporate news now. Musk's X, formerly Twitter in brackets, we've always got to say that, obtains a $44 billion valuation in a notable shift from last year. Morgan Stanley to cut 2,000 jobs, excluding financial advisors, to manage costs. Semiconductor names. BYD soared to a record on 5-minute EV charging tech. The Chinese robot vacuum makers are rapidly gaining market share, according to offering advanced features versus US peers. They're hoovering up the competition.
Oh, dearie me.
Yeah, that is the only reason I've read that headline.
God,
Yeah,
I did wonder where that was going. I should have known, shouldn't
finally, from me, yeah, you should have known. Finally, from me, some Volkswagen and Vonovia information. VW sold its Traton stake for $360 million. Million euros. That equates to 32.75 euros per share. Vonovia's, that's the one, net loss narrowed to 2024, adjusted earnings at a record high under guidance. And finally, actually, Rio Tinto has disregarded the advisor's push for a renewal of its UK listing structure. And that's about it from me. I believe Zach was on the slopes last night, so the version that he's given me was quite light. So yeah, just everyone point things at Zach.
Deary me. Gets worse every day, that boy, doesn't it?
It really does.
Anyway, right.
We're back to you in the studio.
Let's move past that misdemeanor and crack on with today. In terms of the day ahead, just a couple of things to bear in mind before we get to the meat of things a little bit later on. At 10 o'clock this morning, we do have final inflation figures out of the Eurozone for February. CPI is seen unrevised at 2.4%. I actually can't remember the last time that these figures were revised from the flash estimate, but nonetheless, have a gander at it if you are interested. And we also do have a fair few ECB speakers throughout the day today as well. We're due to hear from Vilroy, Centino, and De Guindos this morning, and then Elderson is due to be speaking this afternoon, probably waffling about climate change as he usually does. The main event, though, of course, comes from the United States this evening in the form of the March FOMC decision. For those of us here in London, do not forget that the Fed meeting tonight is an hour earlier than usual.
Yes.
As a result, we will get the decision, the statement, and the latest summary of economic projections, including the updated dot plot at 6 o'clock London time, 2 o'clock in the afternoon on the East Coast. And that will, of course, be followed by Fed Chair Powell's post-meeting press conference at 6:30 London time, or 2:30 on the East Coast of the United States. Do not be that muppet who's away from your desk thinking it's at 7. In terms of what we expect from the Fed a little bit later on, I think the broad summary of the March FOMC will be one where policymakers seek not to rock the boat too much in terms of what they have to say a little bit later on. As a result, the target range for the Fed funds rate, that should remain unchanged at between 4.25% and 4.5% in what is likely to be a unanimous vote among FOMC members. In terms of the policy statement, that is likely to be broadly reflective of that issued after the January meeting, as a result, reiterating that they will continue to take a data-dependent approach to monetary policy going forwards, and that risks to the dual mandate are roughly in balance. The economic assessment is also likely to be broadly unchanged, noting that inflation remains somewhat elevated and that the economy continues to expand at a solid pace, although there are some expectations that that assessment of economic activity may be marginally downgraded. Once again, the Fed are also likely to flag the uncertainties around the economic outlook, exactly as they did at the January meeting. Moving on from the statement, focus will then turn to the latest summary of economic projections. In terms of the economic forecasts, those issued after the December meeting were a bit of a mixed bag, to be completely honest with you, with only some members of the FOMC incorporating or what they thought would be the initial impacts of President Trump's macroeconomic policies. Of course, this time around, the Fed will incorporate, and all of those policymakers, of course, will have to incorporate their expectations as to how the economy will react to what Trump has been up to over the last few weeks since Inauguration Day. That said, of course, the outlook remains highly uncertain. I think the dispersion around these forecasts is likely to be very, very wide indeed, and also conviction behind the forecast is likely to be lacking. Nevertheless, the uncertainty and also the protectionist rhetoric on trade is likely to result in near-term inflation forecasts being nudged to the upside and near-term growth expectations being revised to the downside. I think Jefferies said this best in their FOMC preview, and I will quote from that here, Thomas Simons, their US economist, noting that, and I quote, "Projecting the economic outlook right now is obviously quite difficult. Projecting how 19 people will project the economic outlook is thus even harder." I think, therefore, it is a little bit of a mug's game trying to predict exactly how the economic forecast will fall a little bit later on today. Of course, the other part of the SEP that will attract significant attention will be the FOMC's latest dot plot. Of course, in December, these dots pointed to a median expectation that the Fed would deliver a total of 50 basis points worth of cuts in both 2025 and in 2026, with the longer run median rate seen at 3%. And that's effectively a proxy as to where the Fed see the neutral rate lying. We'll probably see those dots remain largely unchanged, although there is some expectation that the longer run dot may be nudged a little bit higher, but that revision would probably only be about 10 basis points or so. In terms of Chair Powell's press conference, he handily spoke right before the blackout period began, and I think it's broadly likely that Powell sticks to the script that he outlined when he spoke about a fortnight ago. As a result, Chair Powell will likely note that the committee remain in no hurry to deliver further reductions to the Fed funds rate, with the economy remaining in a good place despite prevailing economic uncertainty. Powell will likely also reiterate that the bumpy path back towards the 2% inflation target should continue, and that the labour market remains solid. The one potential wildcard from the FOMC later on is on the matter of the balance sheet. Consensus sees the Fed pausing quantitative tightening at either the May or the June meeting, with expectations on that front having ramped up a little bit after the publication of the January meeting minutes, which flagged the possibility that the Fed may tweak their balance sheet runoff program as we get closer to the debt ceiling in the United States. There are a few on the sell side who instead reckon the Fed may actually bring QT to an end or to a pause today. If they were to do so, that would likely likely be a little bit of a fillip for risk assets, and it would also be at the margin a little bit of a dovish surprise. So do keep a very, very close eye on that one. But on the whole, barring any potential changes on the balance sheet, I think the March Fed meeting is unlikely to be a massive game changer. To be completely honest with you, the Fed are firmly on the sidelines for now. As that quote from Jeffries just exemplified, they've got as little idea as anyone else as to exactly how the economy is going to evolve. They're also dealing with inflation that remains above target, a labour market that is pretty tight, and as a result of that, they are not going to be in a rush to deliver further rate reductions, and certainly won't want to rock the boat given the tumultuous nature of political and fiscal policy making at this moment in time. Last but by no means least, if you are awake after the Fed meeting until 9:45 this evening, we have GDP figures due out of New Zealand, where the economy is set to grow by 0.4% in the fourth quarter, and that would snap a run of 2 consecutive quarterly contractions. Go on.
Sorry, so the figures at 9:45, right? Not the end of the Fed stuff, because that'd be 9:45 because the hours.
No. The figures are at 9:45. The Fed should be done by about 7:30 this evening.
Yeah. That's what I was thinking. Hang on a second. I think he might have the time zones wrapped around his.
No. Don't worry. But I don't think anyone cares about New Zealand GDP. To be honest with you,
I don't even think New Zealand cares.
Yeah, probably. It's likely to be a bit of a drift as we move through today, and then all eyes on what Powell has to say at 6 o'clock this evening.
Very much so. Just a headline that dropped whilst we've been talking regarding this, a ceasefire on energy assets. Apparently, we're hearing that Russian forces attacked a power system of Ukraine's state railways. So that ceasefire is already done and dusted by the looks of it. Good work, lads. Good work.
The other thing I'm hearing is just a fuckload of excuses from our correspondent in the Alps, but standard.
I've seen that. Apparently busy trading BOJ and Lira. Yeah, good one.
Yeah, of course he was.
With his schnapps in one hand. But anyway,
he was probably long Lira, knowing him.
Mr. Michael Brown, thank you so much as always, listeners. Thank you so much as always. This will be going up on YouTube shortly. Again, if it does make it to Spotify today, happy days. But if not, it'll be some point this week that starts going live as well. So more ways to listen to me and Michael Brown, or mainly Michael Brown and me, just throwing in some few curse words from the sidelines. But guys, have a very good day. If you are trading today, keep it tight. Remember, as Michael said, it's all about FOMC later on. So no one likes the idea of doing your ass ahead of a big event. So keep it tight, keep your powder dry, and we'll see you all tomorrow.